to be okay going over the mountains. I see some of my Truckee folks over here. I'm coming over here for this story, right? And you start the trek up the mountain in the sunshine, and you're like, no problem, I'll be at San Francisco in no time, right? And then you get to Truckee, and like, man, the dark clouds are kind of up here in Truckee. They're in a different climate. 10 minutes later, you're emotionally chaining up on the side of the road, trying to go over the summit, and you're like, what happened to the sunshine at the start of this drive, right? And you get through it, and then you get into Sacramento, it feels good again, and you go back through it. Or maybe we've all tried, I know we've all been on plane flights where we're landing in Reno, right? Especially if you somehow justified, hey, I'm going to land in Reno at 4 p.m., and the winds are up. We've all been there, right? We're doing this. And right as we're about to land and get to that stable ground, that runway, you hear the roar of the engines, and before you know it, you're going back up. You're banking over the eastern foothills, and the pilot's coming on, and it's like, oh, sorry about that. Crosswinds were really high. And they're like, we're going to try that again. And everyone's screaming, and eventually you get down to that stable ground, right? But this is what we were going through. And the first time we hit 7%, everyone panicked. The second time we hit it, we had sadness, acceptance, all those stages. And the third time we hit it, your buyers were like, okay, tell me about seller credits and temporary buy-downs. Like, let's just figure this out, right? And we moved through this. Eventually, we got ourselves to this year, which I would call navigable water, okay? We're starting to see a little light at the end of the tunnel that's more predictable. Talked about all the time in my 25 years in the business. If rates were just 6% all the time, life would be a lot easier, because then it would be about your expertise, your professionality, and what's going on, and we could just kind of know what's happening, that beauty of stability. But we are starting to see some of that, right? The last 4 years have been anywhere from crazy to murky in what's been going on, but again, we're starting to see a market where people can kind of feel comfortable with what's coming. And as comfort enters into the process of buying a home, it can make our lives all a little bit easier, right? And helping kind of balance the market and where we're going and what we're doing. So we've made our way through all this. I think it's actually in the speaker's notes that we have to have one squiggly line in our economic summit slides. So here's my one squiggly line. Again, this is all the years I was just talking about. What's this, guys? Artificial calm, whitewater. Here's our eddy season, right? And now we're starting to stabilize out, okay? That's the manifestation of our river dynamics that we just were talking about. Now, if we look ahead, I warned you last year, get used to life in the sixes. Every forecast is about that. Now, today, I'm standing before you where we've hit some of the lowest markets in several years. We are seeing some deals close in the fives, government loans in the mid-fives. That's great. But as we talk about averages, I want you to take a look at this forecast. Today, as I stand here, Fannie Mae is a little more correct than the other ones just because of what's happened in the last few days, okay? But what do they all have in common, from the MBA to Fannie Mae to NAR, is actually a predictability of settling back into the mid-sixes for the next couple of years. A couple dynamics there. One, I think they're hedging against some of that recession talk that Taylor was chatting about. They don't want to forecast too low, as there's still dynamics and headwinds that they see out there. But the reality of our market is this is navigable water, right? We know what's coming. It might not be our dream of cruising around the lazy river out in Sparks, okay, where life's a lot easier and all is good. But navigable water is a heck of a lot better than bouncing off rocks in whitewater or getting stuck in eddies, right? And as we talk about the opportunity, we don't need artificially low rates to win, right? People who aren't necessarily professional or come in and out of both of our businesses during the good times, right, when life is easy, that's not what we're talking about, right? We want to be, if we're committed to the professionalism of our industry, we like navigable water because we know how to guide through it, right? And these markets, we want stability, then we want creativity and partnership to enhance what we're doing. These markets, I talked to you about it last year, the cream rises to the top, right? The best of the best win, and that's certainly representative of who's in this room. And if rates fall more, we can celebrate. The reality is we're in about negotiating, finding the best ways to go, and navigating this market appropriately. And so as we think about how we're moving forward, I think we need to be happy that we're moving again into waters we can feel more comfortable with. In this room, being the number one in the area, who's better served to navigate northern Nevada better down the river of our market over the next couple of years than you guys? Let me conclude by saying I consider it always a blessing to be in the room with you. I appreciate Dickson's leadership in allowing me to speak very quickly on the mortgage market, the rates, where we've come, where we're headed, and the best way to look at it and help your borrowers understand where we've come from and where we're going. I appreciate your time, you guys. Thank you.